Investing in Las Vegas is extremely unique. There's different type of products out there, and anything from short-term, mid-term to long-term rentals that's available. And I have had clients that are investors, from beginners to experts, that reached out and asked for my opinion and my thoughts on this subject. I myself am an investor. I have been for over 10 years, and I can share some of my personal thoughts with you guys here. So the reason for this video is so that you can be prepared to invest here in Las Vegas. There's a lot of tricky laws and some scams and just some things that you should know about before you navigate through the waters of Las Vegas to invest in real estate. So by the end of this video, I hope that you have enough information and knowledge to educate yourself before you make that big commitment of investing in Las Vegas. So throughout the video, I'm going to bring up some different elements and variables for you to consider, such as permits, fees, HOA dues, special improvement district fees, so that you can use that to better evaluate your investment opportunities. So number one, short-term rentals. Short-term rentals are the most lucrative return on your investment. You're looking at 10 to 20% return cash on cash. Now, going in short-term rental here in Las Vegas is very tricky because there's a lot of rules, regulations, permits required, wait lists, deadlines that you have to meet. The nature of Las Vegas is a transient city with hotels, and they don't want short-term rentals to come in and disrupt our industry. So that's why there's so many red tapes around short-term rentals. So if you don't follow these guidelines or be in compliance, there's a chance that you'll be fined so heavily that it could be more than the house is worth. And there are true stories out there that people end up having hundreds of thousands of dollars in fines because of illegal short-term rentals, and they end up having to sell their home. Like on a Swift, you'll find properties out there that are fully furnished, that's like done up to the T, and you're wondering, why are they fire selling this thing? And the chances are they got fined and they just need to dump this and get out of it. So this is where you have to be careful, right? You got to pay attention to where you're finding these deals and what kind of deals there are if you're looking for this type of investment. As an example, I have a good friend of mine who's also a client of mine. He was in the middle of a deal that he thought was godsend, the best deal possible. He had his money ready. He's on his way to the bank to meet the seller, ready to just sign on the dotted line. Luckily for him, he called me on the way there, just asked for my opinion and my thoughts. And when I asked him about the address, he didn't have it. He said he has a link to some photos and some descriptions. And when I looked at the link, fortunately, I knew exactly where this place belonged because I sold several units in this place. There were some red flags there, and I had to basically stop him before he gets to the bank and pull out his hard-earned cash and give me some time to research this for him. And turns out this guy was getting ready to just dump the property because he has a heavy lien on the property that was about to be called for, a judgment that's coming for the property title. And he wanted to just quickly cash it in by fire selling it at half the price that it's worth. And for some sucker to show up with some cash, meet him at a bank, sign on the dotted line, and he's probably catching a flight overseas within the next few hours. And sure enough, that was the case, right? I found title report showing that he had a lien recorded on it. There was a judgment filed. And if someone were to pay him cash and assume the title to that property, guess who's going to be responsible for those fees? You are. So after he found out the truth about this deal, he was very grateful, of course, and didn't go through with the deal. And he calls me every single time he even sees another deal. And this is what happens if you don't follow these ordinances and rules that were applied by the state, because there's going to be a lot of scams and losses come out of that if you don't do it the right way or know your way around doing it. Number two, let's talk about midterm rentals. Midterm rentals typically is more than 30 days. Which is now no longer short term. You don't have to apply a permit, and you're not regulated in a way by the county or the state. And you typically rent that out fully furnished. And these are typically corporate rentals where companies are relocating executives and getting a place for them to stay, or travel nurses that are coming just temporarily and needs a place to stay. I personally have experienced short-term rentals. The cash on cash return is about 8 to 12% on these. However, there are a little bit more risk. There are a little bit more vacancies. You have to select the right areas to have your midterm rental placed. You have to furnish it properly. There's some expenses there. and there's competition. There's always a bigger fish that's going to furnish it nicer, that's put more capital into making it look nice, and you will be competing with that. So because the state regulation is more lenient on midterm rentals, the biggest thing you got to focus on is the HOA regulations. And a lot of these HOA has a midterm rental regulation of 6 months or more. So they don't want you to lease it for less than 6 months. So but when you're searching for these opportunities, getting the chance to review those rules and regulations is highly, highly important before you pull the trigger on that investment. And just because states aren't involved with regulating midterm rentals, HOAs are just as powerful. If they decided that you broke their rules and they're putting a lien on your property, they can call on that lien and foreclose your property if you don't follow their rules. Number 3, long-term rentals. Now this is my wheelhouse, and I really enjoy it because I get 4 to 8% cash on cash return. I get up to 9% equity gain year over year, and the stability of it. I like setting it and forgetting it. And sometimes that's what investment is about, right? You don't want to have to keep working at it month over month and year over year. You just put a good tenant in there, set it and forget it, and just continue to collect that mailbox money. As far as demand goes, my vacancy has been no more than 30 days on all my portfolios. It just has such strong demand here because A, the affordability. People coming from out of states are not used to how much home they could get for the rent that they were used to paying. And selecting the right area typically will just yield you the result you want because there's just not enough homes here in Las Vegas. The supply is limited both in sell and lease. And if you have a good product, it will lease within 30 days. When you start seeing homes being built, communities being built for the sole purpose of long-term rentals by institutional buyers or Wall Street money, that's a good sign if you're in the long-term rental space because they clearly see the opportunity there and they have a lot of data that they could go off of, right? So I want to ride the same wave as them, seeing the potential to grow long-term rental properties here in Las Vegas. That's what I want to be a part of. So the only thing I wish Vegas has more is the multifamily properties. Now, we have some multifamilies, but they're not in the most desirable area, at least not in the areas that I would invest in. And we all know as investors how important quality tenants are, keeping a low cost, low expense, low turn rate. In most of the multifamily products here in Las Vegas, just don't check those boxes. So the $1 million question, is the year 2025 a good time to invest in real estate? Well, let's break it down real quick. Real estate has been the most stabilized asset today, right? We just went through this whole shakedown of the market, the stocks all over the place, everything is all over the place, but real estate has been fairly stable. In fact, we're still 2 months away from being a balanced market. We're still shy of inventory to be in a buyer's market. We're still a strong seller's market. Values retaining just fine. So if you were to invest in real estate, there are 2 things that I would look for. One is new build homes, because builders are incentivized to move their product in specific times of the year or quarter that you may be able to get some of the best deals if you can go in and time it properly. 2, if you're buying a resale property, there's a chance you can use creative financing to increase your margin on your return. There are ways like owner will carry, wraparound loan, AITD. These are all creative ways where you can get a resale product that you normally wouldn't have if it wasn't because of the creative financing. So one last strategy is going off market. When there are sellers that want to avoid the process of selling, cleaning the house, staging, having showings done, open houses, they just want to get an offer on the table that they know is fair and they'll move and take it. That's when off-market opportunities come. And when you're in the resale market as an investor, we come across off-market opportunities all the time and we present it to our clients. They get first dibs. They're not competing with other buyers, not the traditional buyers, not the investors. And they get to handpick what they want. I hope this video gave you enough information to make an educated decision on what you want to do with your money. If you find the information I gave you today useful, please like and subscribe to our channel. And if you have any questions or comments, you know where to leave them. Until next time, 再见.